Hello and welcome back to Moneycontrol's live stream. You're tuned into Closing Bell with me, Lovisha, Darad, and with me joining my colleague Nandita Khemka. Well, Nandita, it was another day of retracement, and Nifty, which defended that 25,500 mark for the past 2 days this week, it saw a breach and it fell below that 25,400, and today the day's low was 25,378. But yes, red across the board despite how we opened in the green. Sensex also saw a loss and ended with a loss of about 287 points as well. Midcaps, which managed to close in the green yesterday, snapped its 7-day gaining streak and ended in the red. And now even the small caps, that also extended the losing trend to about second straight session. But if you look at the sectoral indices, Nifty Metal Index, that stood tall with about 1.4% gains, given that the cooling dollar index is playing a tailwind, and some of the metal stocks also dominated the top Nifty 50 gainers list. On the other hand, Nifty IT Index, which saw good gains in the open and of course in the intraday sessions, that also trimmed its gains and ended with about 0.1% gains. But yes, financials, one of them, they took a backseat, Bank Nifty Index, with about 0.8% of a cut. But yes, the jitters were quite imminent ahead of the July 9 deadline of the tariffs, while we did see confirmation from the White House and even the US Commerce Secretary, but the markets took to the chin and we can see a red across the board, Nandita.
That's true, Lovisha. As you mentioned, of course, it was a down day, although, at one point in time, we were staring at a triple-digit cut on the Nifty, but thankfully, we did manage to defend that 25,400 mark on the downside. As you rightly mentioned, the low point of the day was 25,378 or thereabouts. 25,380, I want to mention, is a crucial support zone that technical analysts were pointing to, and 25,350, that becomes a crucial support zone now, since we did breach that 25,380 level on the lower side. But if 25,350 also breaches in the coming day, then 25,300 and lower levels can't be ruled out as per technical experts. But Nifty PSU Bank Index, in tandem with other financials, snapped out of a 6-day gaining streak today, and even the Realty Pack, Lovisha, that extended its losses to a 5th straight session. In fact, the Realty Index lost 1.5% in today's session. But autos, mind you, managed to hold out. There was some buying coming in on shares of Maruti as well, despite disappointing sales figures for the month of June. We saw some bit of buying coming in on a Maruti as well. But yes, Lovisha, those were the levels to watch out for in terms of the volatility index, the India VIX index. It was higher today, but even that cooled off a little. So although there is weak sentiment, as the two nations, India and US, race to ink a mini deal ahead of the 9th July deadline. Of course, we are seeing a lot of caution play out. Next 1 or 2 days will be crucial. If there is no deal, then it's anyone's guess where the markets will be heading. But aside of that, if you look at the advance decline ratio, of course, it was a down day for the broad end of the markets as well. Advance decline ratio once again was skewed in favor of laggards. So the advance decline ratio on NSE was 2:3. So if you look at the advances and declines, 1,063 shares advancing to 1,617 shares declining. So yes, there was the selling pressure across the board, but the Nifty Midcap Index, ended lower by just about 0.2%. Although at one point in time it was clocking in higher losses. So all in all, we did manage to trim some of those losses, but a lot will hinge on a trade deal, whether that fructifies or not. That is how, or that is when we would know where the markets will be headed, Lovisha.
That's right. The trade deal deadlock that has been taking place, of course, the agri and dairy concessions, that is what India is resistant to actually open up the entry barriers to. But yes, coming to the markets and looking at the large caps and from the Nifty large caps fronts, what moved and what did not move in today's trading session. If you look at on the way up, Tata Steel, JSW Steel, like I was talking about, the metal stocks took to the chin, given that with about 3 to 2% gains, Tata Steel with about 3% gains, and JSW Steel also with about 3% gains that came in. The cooling dollar index is playing well for the metal stocks, and you can see both of them actually doing well in today's trading session. Asian Paints also did well with about 2% gains. We did see that the anti-competitive measures that the CCI probe has ordered to the Asian Paints did not do well during the initial part of the trading session, but it did recover quite smartly, and it did end with the gains of about 2% or so. Other than that, Ultratech Cement, the entire cement stocks were doing well. Ultratech Cement also did hit a record high in today's trading session with about 1.8% gains as well. Maruti Suzuki, given the double-digit fall in the July auto sales data, despite that, Maruti Suzuki also did well with about 1.4% gains in today's trading session. However, on the contrary, on the flip side, on the Nifty 50, Shriram Finance saw a cut of about 2.8%. HDFC Life were down for the second straight session with about 2.5% cut. IndusInd Bank also not doing well. We did see Goldman Sachs downgrade to about sell rating on the counter, and even they reduced the EPS estimates for the lender for the FY 26 to 27 as well. So IndusInd Bank also with a cut of about 2% or so. Bajaj Finserv and L&T, some of the other top losers on the Nifty 50. But yes, mid-cap and small caps, which were trying to maintain some resilience in the past couple of sessions, have seen pressure, and today definitely one of the top losing ends also. Nandita, what are you making from the broader end of the markets?
So Lovisha, there were quite a few movers when it comes to the broader end of the markets, both on the higher side as well as the lower side. But I want to talk about Green Folks before anything else, because certain programs of Axis and ICICI Bank have been closed. And that weighed heavy on the stock prices as well. The shares of Dream folks were down somewhere around 6.5% or thereabouts, because the closures will have a material impact on their financials going forward. In fact, the management was on CNBC TV 18, and it was an exclusive interaction. And the management mentioned that the clients had to in fact move on from the company's lounge program due to airport operator pressure. And they also, the management confirmed that there will be a financial impact, because of these closures, but they've also maintained that they are focusing on other areas aside of airports, and they will be looking to diversify into lifestyle and railways. Nevertheless, given the fact that, airports business was their mainstay, that's something that weighed in on sentiment, because it will have a material impact on the company's financials going forward. Inox Wind, did well in a weak market because Motilal Oswal has initiated coverage on the stock. So the stock was up somewhere around 3% or thereabouts in a weak market. Buy rating coming in from Motilal Oswal, and the stock, of course, upbeat. RITES was another stock that rallied on the back of an order win, a $3.6 million international order win, and that kept RITES in fine fettle. The stock was up somewhere around 6% or thereabouts. In terms of other movers then, in terms of gainers, just a few names. Aside of RITES, you had Sagility, you had Tata Communication. That stock was buzzing in a weak market, ringing loud, so to say, 5% kind of gains there, given the fact that Macquarie has come out with a positive report. We'll be talking about that in just a bit, but that stock was among the top gainers on the Nifty 500 index. You had Mankind Pharma, you had Aditya Birla Fashion. These are some of the other movers. On the flip side, what didn't do well were the likes of Reddington, Narayan Health, Hyundai Motor India and Kirloskar Brothers. You also had RBL Bank. This particular stock has been shining bright. In the last 1 month, the stock has gained 20 to 21% or thereabouts. But today, of course, it saw, it fell in tandem with the entire financials pack. But there was another bit of news around this stock, wherein, one of the reports suggested that Emirates NBD was looking to acquire a majority stake in the minority stake, I beg your pardon, in the company. But the bank has clearly denied this information. And, because of that, of course, that was another reason why the stock was down. The stock, in fact, as I mentioned, has rallied 20% in the last 1 month, and even in the last week or so, you've seen good gains coming in on the stock. So those were all the movers and shakers from the broader end of the markets in today's session, Lovisha.
All right. Now let's quickly break down some of the stocks that did grab limelight in today's trading session, and some of the brokerage notes that also shown upon as well. The first stock that we will be discussing about is Hero MotoCorp. That shares were in focus today after the company did launch a second electric scooter under the Vida brand. That is your VX2. Now the VX2 range is available at a starting price of about 99,490 rupees, which is an ex-showroom price. However, they also launched under the battery as a service, which is your BaaS pricing model. Now that becomes the country's first electric mobility which is offering this particular option. Now under this BaaS model, the prices begin as low as 59,490 rupees, which is your again an ex-showroom price, and they have a battery rental rate of about 0.96 per kilometer. Now, what the brokerages make of Hero MotoCorp after this particular launch, we did see that Citi maintained a buy call on the counter, and they gave out a target price of about 4,900 rupees. The brokerage said that the company's differentiated BAS offering could drive up volumes for Hero MotoCorp. Other than that, we saw Nomura also retain its neutral rating, and they gave out a target price of 46.14 rupees, and Morgan Stanley continued to remain underweight on the counter with a stock price with a target of 37.65 rupees, and they believe that the customers' response in the key urban markets will be something that they will need to track also. If you look at the auto sales figures for Hero MotoCorp that was released yesterday, the entire two-wheeler pack as a whole did well compared to how PVs have fared. Hero MotoCorp particularly, that's a double-digit growth in June auto sales figures, and we have, and that is what aided well for the counter as well. Today also, Hero MotoCorp ended with about nearly 0.2% gains also, and that is what actually did well for Hero MotoCorp going ahead as well.
Okay, two-wheelers, of course, bucking the trend when it comes to sales figures, at least in comparison with the passenger vehicles. But one more thing I want to point out, there could be some bit of a headwind, going forward for Hero MotoCorp, given the fact that the government has mandated anti-lock braking system for all models of two-wheelers, right? And this transition could mean an increase in cost by 3,000 to 5,000 rupees per unit for two-wheeler manufacturers. Hero MotoCorp is expected to be among the worst hit, given the fact that 94% of its models need upgrades. So, that's something that, I'm sure the street will be watching out for as to how it really pans out. But on the other hand, we had, the largest NBFC issue, it listed on the bourses today, HDB Financial. It saw a good listing, a healthy listing, 13% premium to issue price of 740 rupees. So the listing price was 835 rupees. And I think despite the fact that we saw a sell-off in financials, banks, HDB Financial did manage to end in the green over its listing price of 835. Now it is now the 8th most valuable NBFC with a market cap of over 70,200 crore rupees. Now even before it listed, the company earned a buy call from MK Global. But I would just also want to point out that even when the IPO was open, it saw very strong retail and institutional interest. The IPO was subscribed 17 times the shares on offer, and all the brokerages that came out with their notes on the IPO did advise investors who were allocated the shares to hold it for the medium to long term. Now coming to the MK report, now it has listed out a couple of strengths, opportunities, and even risk factors for HDB Financial going forward. The target price that MK has set for the stock is 900 rupees, which implies a 20 to 22% upside from its issue price. The reasons for upgrading or in fact initiating coverage on the stock, so to say, a granular and diversified customer base that HDB has, a strong omni-channel presence, a multi-product portfolio that caters to wide and varied needs, and also seasonal leadership, a seasoned leadership team that's backed by a very credible board. Now, in terms of opportunities, MK says there is huge potential in under-penetrated areas like gold loans as well as microfinance loans as well going forward. And of course, the fact that it has HDFC Bank's parentage, it gives the HDB the right ingredients to scale up. It has access to the best pricing, ample liquidity, powerful brand visibility, credit rating as well, of course, because of the parentage it holds. Now, it also believes that HDFC has the potential to become a meaningful lender at scale. Now, additionally, HDB, according to MK, may be poised for high growth and profitability amid favorable interest rate cycle with front-loaded repo rate cuts and credit cost moderation. In fact, I had also spoken to the management when the IPO had opened up, and they had said that the rate cut cycle bodes well for them, and they could only expect margin improvement here on. MK has projected 27% EPS CAGR over FY25 to FY28, and it has forecast 2.7% ROA, return on asset, by March 2028. Their return on asset in the first half of FY25 was dropped. In fact, it dropped to 2.16%. But now, of course, MK believes 2.7% ROA is possible by March of 2028. However, it's the implementation of RBI's draft circular on overlapping businesses. In the current form, it's a draft. In the current form, if it becomes a reality, that could be a headwind and a risk for HDB, because that would mean that HDFC Bank will have to cut stake in the lender or in the NBFC to below 20%. If that happens, of course, it will affect credit ratings, it would affect funding costs. Of course, it will also affect the overall business strategy. But the management, when I had spoken to him, I had posed this question to him, and he had mentioned that there are no leads from the bank as such. They are operating as separate entities. There's no overlap in terms of customers as well, and their technology stacks are also different. So that's one argument they are presenting to the RBI. So all in all, a strong listing, and of course the company has already earned its first buy call from MK.
That's right. Strong listing coming in for HDB Financial Services. Well, also, Nandita, I was reading an interesting report that came out by Samco where they mentioned that all the mega IPO issues which have crossed above that 10,000 crore rupees, they have actually given out an average negative returns of about 20% after the 6 months of their listing. Hopefully, HDB Financial Services is one of the counters that actually avoids this curse at this point of time. So 6 out of 8 issues that they have mentioned, they have given out of negative 20% returns on an average basis. But yes, let's watch out for HDB Financial Services, and hopefully this would actually evade this particular historical trend as well. But coming back to some of the Q1 updates which have been started to pour in, V-Mart Retail that posted its quarterly business update figures for the April to June quarter, where they saw 13% year-on-year increase in the revenue figures. Now this growth was supported by modest same-store sales growth. And moreover, the company has launched about 15 new stores during the quarter, 3 in Tamil Nadu and Uttar Pradesh, 2 stores each in Bihar and Uttarakhand, 1 store in Jharkhand, Gujarat, Telangana, Maharashtra and Odisha as well. Now what all of these additions, V-Mart's total store count has risen to about 510 outlets, 510 outlets across the India. So that's a fairly decent update that did come in from the company as well. There was also an interesting report a few days back by the Retailers Association of India, where they believe that the retail industry could further grow in the coming months, led by the strong festive season. Now, we did see that the demand pattern got subdued last fiscal after the phenomenal growth after COVID. But now that the tax cuts have been announced, corporates are hoping that more money would be in the hands of consumers, and that would drive up the spending and consumption patterns going ahead. How much V-Mart Retail would benefit in the face of other competitive brands, however, that remains a question, because the stock has already plunged over 20% so far this year. So that is something that we will be watching out going ahead as well.
That's true. Same-store sales growth moderated to just 1%. Of course, a lot has to do with the fact that some of the festivals were in the last quarter. X that perhaps the same-store sales growth would be somewhere around 5% or so. But of course, the street giving a thumbs down, given the fact that of course, it was already accounted for in the last quarter. But that was about V-Mart. One stock that was ringing loud in a weak market was Tata Communications, the Tata Group stock. Macquarie has initiated coverage on the stock with an outperform rating. They are seeing a target of 2,300 rupees on the stock, which implies a 30% upside to yesterday's close price. In fact, they also believe that the stock could nearly double in the next 3 years. So that's the kind of outlook they have, very promising. Now, the reasons for this outperform call, well, they feel that the company is enabling digital transformation for enterprises by leveraging one of the world's largest digital infrastructure networks. In fact, the strong upside potential in growing its digital services business, where the company is already ranked among the leaders. So yes, the potential to grow digital services business is pretty high, and I think because of that they have given out an aggressive target price of 2,300 rupees on the stock. In fact, they are expecting the return on invested capital to recover and exceed 20% by FY28. Now that will bring the company closer to its long-term target of 25%, assuming that the company does not make any other acquisition. The ROIC declined to somewhere around 11% in FY25 from 16% during FY21 to FY23 because of the recent acquisitions they have made in their digital portfolio. Now, earlier this year, you also had ICICI Securities that double upgraded the stock from hold to buy. In fact, they also listed out a target price of 2,100 rupees. In fact, the CLSA also has an outperform call. JM Financial has also assigned a target price of 2,030 rupees on the stock. Of course, the digital segment, the digital portfolio, digital services portfolio gives it a competitive edge. That's the consensus view that we have picked up from all the brokerages. In fact, Tata Communications was also pretty much active in the derivative end of the market today. There was a rise, or significant rise in open interest. In fact, the open interest stood at somewhere around 16,500 contracts. The stock, of course, has seen a very, very good pickup. At least in the last 2 months, the stock has gained somewhere around 20% or thereabouts. So yes, it has had a good run, and now this very bullish report from Macquarie bodes well. Let's see how it really picks up. But although it hasn't had such a great first half, last 2 months have seen a good meteoric rise in the prices of share prices of Tata Communications.
Okay, Tata Communications double upgrade from Macquarie. Like Nandita, we were talking about that. Everyone is talking about this is a stock pickers market, so everyone is scrambling for some value. So this report is definitely an interesting one that is coming out. But with that, that's all the stocks we have for today. With that, we've come to an end of this edition of Closing Bell. It's a wrap from Yatin and Nandita and me. Thank you for watching.
Thank you.